Hey traders, checking in on the cryptocurrency space. We got our flush of 30,000. The trade came to us. We got the bounce that we were looking for. And now we watch to see what do the bulls need to do to prove follow through to us. We'll check in on the charts. We're going to look at a head and shoulders pattern that is not a head and shoulders pattern. We're going to look at a comparison between growth stocks and Bitcoin and why they are so similar. And we're also going to talk about our new backburners alert on the Trader Pro alert system. So I'm going to talk about some things, then we'll go through our normal technical analysis rundown. The first thing I want to address is what a lot of people on Twitter have been calling a head and shoulders pattern that is not a head and shoulders pattern in my opinion. And the big short guy, Michael, I don't even know how to say his name, Michael, the big short guy, talking about this being a head and shoulders. Keep it simple. What is a head and shoulders pattern? It's a bearish reversal pattern. A lot of people look for it and just say, oh, is this shape look like a head and shoulders? Use your trends of price levels, because all a head and shoulders pattern is an uptrend of higher lows and higher highs. Then you have a pullback that is either holding the higher low pattern or it can lose the higher low pattern, but then you see a lower high and lower low. So all this pattern is a confirmed uptrend changing with a lower high and lower low, the right shoulder, to a confirmed downtrend. That's as simple as it is. So you have two scenarios. Number one, you're watching a weekly uptrend. Higher low, higher high, higher low, higher high, higher low, higher high. We lose support, red flags flashing. We just lost the weekly uptrend for the first time in months. Lower high, weekly downtrend confirmed. There is your head and shoulders pattern right here. And as soon as you break 47,000, it is confirmed. The better risk to reward trade for a bear is making an entry on a lower high and top fishing the high. But if you entered bearish at 47,000, still plenty of opportunity to the downside. That is when we confirm the weekly downtrend. If you are acting on this, you are so late to the party that you are going to lose money. And anybody that acted on this neckline breaking is losing money right now. Any bear and any bull that acted on it sold the bottom. So this means nothing to me. What is this, a bearish reversal pattern? We got the bearish reversal pattern at 47. This pattern doesn't show me any kind of reversal because it already happened. It's just continuation of a weekly downtrend. It's the same thing for me as a death cross. The death cross of the 50 crossing the 200 moving average. Again, we got that information at 47,000 5 weeks ago. It is a lagging indicator, and if price levels are so much more informative than lagging indicators. So death cross means nothing to me. Golden cross means nothing to me. Those are late signals that price action already dictated long ago, and that was not a head and shoulders pattern. I mean, I guess you could call it one, but it was an extremely late, bad head and shoulders pattern. All right, on to the next topic. Next topic, I actually wrote some things down for this video. Growth on the monthly. So a couple things I want to talk about. Well, we'll start there. Growth on the monthly. So growth stocks. And this hits home for me because over the last 6 weeks, I have just been scouting and trading and playing growth stocks for this exact setup that Bitcoin is currently in. Massive breakout to all-time highs, multiple months of pullback. For growth names, it was 4 or 5 months of pullback. EMA 12 support test and hold, monthly higher lows set, and then we scout monthly lower highs and tightening ranges. So just as some comparisons, we can see Bitcoin here grinding EMA 12, battling to hold it with 1 week to go before this monthly candle closes. NIO. And this is electric vehicle. Massive breakout to all-time highs. 4 months of consolidation. We grind the monthly EMA 12. The monthly higher low is set. And now we scout the monthly lower high in equilibrium. Biotech sector, XBI. Breakout to all-time highs, 4 months of pullback, EMA 12 support holding, not as convincing a monthly bounce, but we're watching for it. ARKK, Cathie Woods ETF, massive breakout to all-time highs, 4 months, EMA 12, monthly higher low set. And there's a lot more. TAN, solar sector, same deal. Does that look like Bitcoin? It sure looks like it to me. Patterns repeat themselves. Human psychology, human emotion repeat themselves. This is the same thing. This, to me, is a potential glimpse into the future of what to be watching for on Bitcoin. So I have a mindset right now where I am trading Bitcoin short term trades to position myself for monthly higher lows. And I just did that on this bounce, and I'll talk about that in more detail when we get to it. But I am now in a risk-free position with a monthly higher low position. If it's a monthly higher low and we bounce, I'm targeting upper 40,000s, and we can use our fib retracements. Ideally, the bulls get to a 50% retracement, but I'll just be targeting the upper 40s. If we do not, and I am wrong, and our monthly higher low is not set, I stop out with zero risk, and I go right back to being alt cash and building a monthly higher low position again from a lower level. I don't care if the monthly higher low is at 28,000 or if it's at 22,000. I just care if I manage my risk to position myself well for when that monthly higher low is set. And in the stock world, I traded ARK and I nailed the monthly higher low. So I entered my ARK position on the bottom day, and that was partially luck, but exited half fairly quickly, risk-free stop under the low, and I've been scaling out. I'm all out now. Definitely sold a little too early. I think I exited everything on Monday, but scaled out into this move. And it ended up being a 25% move at this point. So I'm looking to do the exact same thing on Bitcoin. One other note, Bitcoin weekly bear flag confirmed into a lack of follow-through. So weekly bear flag confirmed, no follow-through at this point. Bulls have more proving to do. I need a daily trend change back to the bulls to call this a weekly bear flag with no follow-through. But if we get it, look at natural gas. Again, what do any of these things have to do with cryptocurrency and Bitcoin? Natural gas and the biotech sector? Again, it's not the sectors or the relationship of the assets that I'm looking at. It is the human cycles of emotion and psychology and why technical analysis works. Natural gas. Monthly has been in an uptrend, but we had a pretty solid pullback from the high of the bounce, and we were looking for a monthly higher low. We're looking for a Bitcoin monthly higher low. It's definitely a different setup, but we're looking for a monthly higher low. Weekly. Big drop for an entire month. Weekly bear flag. Confirms with zero bear follow through. Monthly higher low set. I'm not suggesting Bitcoin's going to V-shape to a higher high. I am suggesting that bear flags with a lack of follow through can indicate a shift into the opposite direction. Number 3, backburner trades on traderpro.com. So this is one we've been working on for a while. And again, all props go to the developers, not me. All I did was provide the words and said, change these words into a language that gives us alerts when these scenarios set up. But backburners are one of my favorite trades. And again, we have a whole video dedicated to it. If you Google backburner chart, guys, you'll know exactly what it is. So most of you already know what it is. But 5-minute, 15-minute, hourly, 4-hour, and we now got them. And we can use them in both directions. In this current market environment, the bears are in control. So the backburner trades should be used by bears. For example, if we're bouncing on Bitcoin and we're just looking for a daily lower high, first hourly RSI hitting 70 is a time to potentially be scouting bearish. Just like if bulls are in full control up at the highs and we dump to first hourly oversold, that's a time to be looking for a bounce. It's the opposite right now because we're in downtrends on the weekly and daily time frame. So I would be using the backburner setups right now for bears and not for bulls necessarily. If we resume a daily uptrend and we have a lot of strength and there's a big sentiment shift, then we can start using them for bull trades. And we use them manually. They wasn't programmed at that point. But on this recent run to all-time highs, backburner trades were just money on all time frames. If you buy first oversold from all-time highs, you're making money. So this is a very high probability trade in the right broader market conditions, but looking forward to the next time we're in blue sky breakouts for this to be an extremely useful alert. And again, if you are a bear trader, it's definitely still useful in this current market environment. So check that out, traderpro.com. All right, now we're going to the dump. And everybody wanted a video yesterday, and I appreciate your interest, but there was nothing to say. Everything from the previous video happened exactly as we were looking for it to happen. And the question from there is, what does follow-through look like? And yesterday, we had no idea what follow-through would look like. So all I would say in the video is, yep, we got exactly what we were looking for. We have to see what the next couple days bring. So why were we looking to buy a break of 30,000? And again, I talked about in the last video how I did not want to see a bounce to a lower high to cool everything off and then a bear break after a daily bear flag, because I want this waterfall drop. At that point in time, we had dropped with no daily bounce 30%. The more extreme, the better. The more extreme, the more aggressive the bears, the more aggressive I go as a bull. As soon as you break 30,000, again, put yourself in the mindset of both sides of trading. As soon as 30,000 breaks, who is left to sell longs? Only the very, very, very late bulls that capitulate. Who is left to short? Only the very, very, very late bears who don't know what head and shoulders pattern is. Other than that, you only have bears covering after big wins and locking in profits, and bulls, everybody was, I mean, you just got to look at crypto Twitter. Everybody was looking for $29,000 to $26,000 range to be looking for some buying. So a lot of buyers ready and waiting for it, and that is why you see order book flush down. You fall through 31 and you fall to 29. There is now nothing in the order book between 31 and 29. Very thin. And you get the V-shaped bounce because the scale's tilted. Supply of Bitcoin outweighing demand for 3, 6, 8 days. And as soon as you break 30,000, the scales do this, and then they do that. And that's what gets the bounce going. So going to bed the night before, right here, we had a solid bounce. And I was sitting there and we were in the chat room and everybody's watching it. Is this the break of 31,000? We held it by $160. And I'm sitting there waiting. I got my game plan. I'm saying I will either enter on a break of 30,000 or I will wait for bulls to prove something to me on the daily time frame. If neither of those two things are happening, I don't trade. The trade has to come to me. And again, I say this all the time, but the most powerful thing that we have as traders is deciding when we trade. It's like if you were a marathon runner and you get to choose the day that you run the marathon, and you choose the day that is in ideal conditions for you and your performance. So I don't have to trade. And if the trade doesn't give me the ideal setup, I don't take a trade and I don't lose anything. So we got down to 31,000 and we ended up bouncing a solid 6%. And I saw that bounce start to take shape. There was a falling wedge. I forget whatever time frame it was that led to that bounce. I think the 15-minute chart was a falling wedge. And I didn't do a thing. And I watched that bounce start to take shape and I went to bed. I said, nope, not the trade I'm looking for. And then the next day, I was all cash and ready for the bear break and the flush. So what did the flush look like? On the 4-hour, it certainly looks like a volume climax, big flush down. On the hourly, hard waterfall drop, we did not get real extreme. So I did not go as aggressive this time around as I did the first flush to 30,000. I was way more aggressive on that flush to 30,000 because everything was in free fall and everything had crushed RSI levels. In this instance, as soon as 30,000 broke, I start scaling in. And I chose Bitcoin and I chose Ethereum because those names I know have a lot of liquidity and I've traded them very consistently. That being said, we knew that the coins that are beat up the most are likely to bounce the most. And we'll see that with SOL and Dogecoin with massive bounces because they were the most beat up. You just have to ensure that your timing is right because if you're trying to play the most beat up coin for a bounce and you're too early, you experience a lot of pain on the way down because they are really moving to the downside. But if your timing is right, the gains are a lot more. And we have some traders that could care less about Dogecoin and its functionality. It is just a vehicle for accruing US dollars that they can then do whatever they want with. And they have made a lot of money trading Dogecoin because of its volatility. So the most extreme drops saw the biggest bounces, but I was personally going with things that I was very comfortable with, lots of liquidity, and that is what I chose. And we expected the altcoins were going to bounce more because that is the pattern that has played out time and time and time again. What has shifted recently is the bounces take place with US dollar and Bitcoin pairings, and then they fade. We don't see the follow through in the trend changes for the altcoins to continuously outperform Bitcoin. They really just outperform it on the initial move up. So I scaled into Bitcoin, a couple positions, scaled into ETH, a couple positions. I still had a bunch of cash that I did not utilize. And if I want to get aggressive, I can be looking for entries on daily higher lows at this point. because we know these bulls are not proving anything to us unless we change the daily trend. And we will set a daily lower high on this bounce as the most likely scenario, because anything under 41.3 thousand is a daily lower high. So we must confirm daily trend changes if we're even going to talk about a monthly high or low being set and a summer bottom being set. If we have not changed the daily trend, it's not in the conversation, even though I just talked about it for 10 minutes. So what I then did is my style of trading. I scaled out, definitely a bit early, but scaled out into the initial bounce, and I now have a risk-free position. So my mindset is, two scenarios are going to happen here. Our monthly high or low is set, and I nailed the bottom, and I have a swing position that I'm going to hold for at least a couple months, and I'm going to have a big win. Scenario number 2, I'm wrong. It's not our monthly high or low. I stop out with zero risk, because again, I sold enough of my position on the way up that my stop loss under the low right now is risk-free. I can't lose. And that is my favorite kind of trade. I've done it today, day trading stocks at least 4 times. I've stopped out on a couple names, and I've had some decent wins on a couple names. But when I am wrong, the risk is tiny because of my partial position maneuvering. So that's what I've done at this point. And again, that for me, my criteria number 1, you have to remember, don't give back profits from earlier this year. Criteria number 2, add to those profits. I should say goal number 2. Add to those profits. Some people, goal number 1 is make as much money as possible. I was in that mindset in 2017. I'm not in that mindset right now. If that were my mindset, I would not be trading the same way. I would not be exiting half of my position. And if I did, I would certainly let it try and play out a little bit longer, but that would be more aggressive. Because obviously, as soon as I exit half of my position, I limit my profit potential as well. So, and another reason that I didn't go extremely aggressive on this dump is because how the bounce played out was a bit different. The 5-minute time frame, it was very clear we're not going anywhere unless the 5-minute EMA 12 becomes support. And then we had this little mini trend change, and then that was it. And it did have a 15-minute volume climax on Coinbase. Highest 15-minute volume candle was at the low. And then it was just V-shape. Because again, that right there is the scales doing that. Nobody left to short. Nobody left to sell their longs. Only buying and short covering. So again, that's the reason I wasn't, aggressive. Back in the flush of 30,000, I was scaling in, and then once it looked like the bottom was in, I was market buying, big positions, market, loading up. This, I was not convinced. I was not convinced that we couldn't see an hourly bear flag into another leg down. The 4-hour RSI was beat up, but it wasn't down in the teens. The daily RSI wasn't down in the low 20s. So that had me a little bit more cautious. And again, just didn't utilize all of my cash for that reason. So since then, we had a 4-hour trend change. Quick little higher low after initial rejections from EMA 12 resistance. Continuation. One thing to note, wedges, broadening wedges, megaphones, whatever you want to call them. Broadening wedges and megaphones, same thing. They're happening more in the stock. Well, I can't say they're happening more. I'm recognizing them more. This is a pattern that 2021 is the year of learn broadening wedges for me personally. I learned rising wedges and falling wedges back in 2018, 19, 20, and I now make good money trading rising and falling wedges, specifically falling wedges for my bounce plays. And it took a lot of observation. So the year 2021 for me is observe these patterns, observe how to best play them, observe how they play out. I can read all about them until my eyes bleed, but observing them happening 100 times is more useful in my opinion. So I'm not acting on these patterns, I am observing them. And they're happening, again, I can't say they're happening more and more because I'm not sure, but I'm observing them more and more in both stocks and crypto. And I believe, from a technical analysis perspective and price action perspective, it is the pattern that's going to stop out the most people. Because you break resistance, and then you break support, and then you break resistance, and none of those breaks see follow through. So any bears that had a stop over 41,000 stopped out right at the high. And any bulls that had a stop under 31 and 30,000 stopped out right at the low. This 12-hour time frame is a bit of a broadening wedge. And then we do it on the shorter term time frames. This morning, 15 minute. 15-minute broadening wedge. Broke resistance, pulled back. We got above the line here, but broke above it, pulled back down, broke support, no bear follow through. No bull follow through, no bear follow through. Stop everybody out. So if I'm a market maker and saying, okay, people are getting savvy to technical analysis. All these cryptocurrency articles have, technical analysis on the front of their cover, and people are learning more and more about it. Again, 2017 cryptocurrency was the most pure technical analysis I've ever seen in my life, and it will probably be the most I ever see. And that's because there were less bots and algos, there were less experienced traders, and it was pure emotion, just human emotion. And now we are in a world with correlations and bots and whales, and it's just, there's a lot more of all those things. So if I am a market maker with hefty position sizes that is trying to run this show, I'm going to stop everybody out in both directions. And that is what this pattern, to me, indicates. Just stop everybody out. So that is what has happened this morning. Bears get stopped out, bulls get stopped out. So watch for broadening wedges and learn about them and observe them. And I can't teach you about them because I don't know enough about them yet. Eventually I'll teach you about them, but I'm dedicating a solid year to watching. Other than that, one more trade that I took. So I was making a stock video yesterday and I saw ETH USD 5-minute flush to first 5-minute oversold conditions after a massive bounce. And I said, I want to play this bounce. And it was right here. And trying to see, is this what it was? Where is the bounce that I played? Yes. Okay. So we had a waterfall drop to first 5-minute oversold conditions after a massive move. So I was entering here, and I had an average of 1968, but I didn't nail the bottom. That's what's throwing me off right now. But anyways, 5-minute oversold was hit. Why did I trade ETH? Honestly, I was distracted making the video. I saw this trade set up right in front of my face. It was up on my chart, and it was up on my broker or my exchange, and it was just easy to click the buttons and get in. And because it was a waterfall drop is why I was entering and okay with a bit sloppy trade, just in the sense that I was not fully in the zone, fully prepared. So I made my entry, I exited half on the bounce, and I put my stop under the low. Could have sworn the low was 1958. There we go. Here it is. This was the drop. First 5-minute oversold. And again, lower high every candle. Said, okay, I'm playing this bounce. In with an average of 1868. Sell $10 higher. Stop under 1859. So what does that mean? That means if this is our hourly high or low and we see bounce continuation, I just increased my position and I have zero risk doing so. Because if I'm wrong, I stop out. In this instance, I stopped out, break even, and then we got the follow through. And had I been in that position on this follow through, that would have been an extra, 2-day maker on this bounce. So the lesson there for me is, I guess, a little bit more wiggle room. I don't really have many regrets for that trade. But that was just an example of, again, the same thing I'm doing on the monthly chart I did on the 5-minute. Sell partial, stop under the low, risk-free. I do it all the time with my trading. And in this instance, I stopped out and definitely left some money on the table, but I positioned myself for the potential to add to my winner, to average up and add to my winner. Didn't work out this time, but it'll work out next time. All right, so that's my plan. If this bounce gets significant follow through and I'm confident in a daily high or low, I may add a daily high or low, but I will have a position for a monthly high or low in Bitcoin and ETH as long as the current low holds. And again, if I stop out break even, I'll go right back to scouting the same trade. So on this current bounce, is it enough for a daily high or low to form? Well, we got our fib retracement sizes. And we got to 50% retracement. So it certainly can be. 4-hour uptrend is our guide. Anything above 31.7 thousand is a 4-hour high or low. When we lose the 4-hour high or lows, our daily lower high is likely set. So we're certainly looking for a 4-hour high or low on current consolidation. Resistance is the top of the bounce, 38.9. Make that 34.9 thousand. Every higher high that we see from here, if we see any more, increases the odds that a daily high or low will form next time we consolidate. When we lose the 4-hour high or lows, we zoom out to the daily and we watch for a daily high or low to form anything above 28.8 thousand. And then it's up to the bulls to prove a daily trend change back in their favor, which would increase the odds of a weekly bear flag with 0 follow through, and it would increase the odds of a monthly high or low being set. And it would give the bulls a lot of breathing room to work with and a lot more comfort. So prove it, bulls. I am in a bullish position. I want our monthly high or low to be set, but I am skeptical of bulls because this bounce is not nearly enough for me to think that this momentum has shifted. So everything, if I made a clickbait title and had a big thumbnail on here calling the bottom, everybody wants to call tops and bottoms. Trading is not about predicting. Trading is determining the most likely scenario and then positioning yourself in a low risk, high reward scenario for if it plays out, because nobody ever knows if it's the low or if it's the top. I have no idea if this is the monthly high or low, but I am positioned where if it is, I make good money, and if it's not, I lose nothing. That is what trading is all about. So I can't tell you, I can't predict what price is going to be the monthly high or low. Is this the monthly high or low? I have no idea. All I can do is position myself to benefit if it is. And when you adopt that mindset as a trader, in my opinion, it will benefit you greatly as opposed to trying to pick and nail tops and bottoms. So I could nail the bottom, but it's not because I'm convinced it's the bottom. All right. So everything about the altcoin space is going to be very similar, just slight variations. The Bitcoin dominance chart is testing a key level of 48.69, and how we react to this level will be key because it's either going to be a confirmed weekly trend change or it's going to be a rejection from weekly EMA 12 and resistance. Again, resistance, I know it's not a price level, and I know people aren't shorting BTC.D, but that's the language we use to communicate the charts. So if we can't break that level, we have an equilibrium forming and tightening range. And we still have a bunch of altcoins where their BTC pairings are potential equilibriums. So ETH/USD, bounce, solid, but just a lower high. If you show me this chart by itself, if you just show me this right here and say, is that our bottom? I would say, doesn't look like it. We're just looking for a lower high. This could be a bear flag at this point. Let's do the retracement on ETH. From the high, lower high, every day, 382 retracement. This is still a possible daily bear flag. Bulls are not proving anything on the daily time frame. They have a lot more work to do. Daily trend change, certainly needed. 12-hour time frame, just to compare it to what Bitcoin's doing. Potential falling wedge scenario. I'll be watching that. ETH/BTC, trying to get a green day going, but again, the 3-day time frame is what we've been looking at, and we've got our high, low, lower high, and bulls have really struggled for the higher low, but it is still possible. And if the dominance chart rejects from that resistance level, and if we hold 5.5, we can stay in a tightening range. I personally am more confident in bulls in the crypto space when it is altcoins leading the way to the upside. And that's just been ingrained in me over the last 6 months of watching the crypto space very closely and knowing that the crypto space has been healthiest over the past few months. When it is alts, they lead the way up and they lead the way down. And just the fact that Bitcoin's leading here, it just makes me a bit more nervous. And I don't know if that's justified or not, but I do know that that's the way that it is. So I have less confidence in the bulls than I would have if the altcoins were setting convincing 3-day higher lows and seeing notable bounce follow through on this current move. Matic USDT, so daily bounce underway, not even breaking the high. It's a little double top, 124.25. Again, we don't have space for a daily trend change here. The bulls must see follow through to create the space for a daily higher low and higher high to try and form. There's a way to distinguish two groups of alts here, names that broke the low of the mid to end May support and names that have not. And Matic has not broken it, and the Matic BTC chart is still scouting a weekly higher low. It will form a weekly higher low. There's just a ton of space for it to happen, and you have to see follow through. The bounces are just setting lower highs. Lack of follow through for the alt BTC pairings. Binance, weekly lower high, weekly higher low trying to form. Tightening range. Daily bounce solid, trend change needed. Anything under 379.58 is a lower high. We must see a higher low and higher high. And this is going to be key into the weekend because that's, Sunday will be 4 days from now. Bulls want another green day tomorrow. And then if we start pulling back, try for the higher low. And then by the end of the weekend, try for that trend change. We'll see if that's how it ends up playing out. But Binance BTC, weekly higher low as well, attempting. 3-day time frame for a bit more detail. Nope. I don't like it as clear. I like it on the weekly better. High, low, lower high, trying for the higher low, trying for the equilibrium. Sol USDT was one of the most beat up names, and it had one of the biggest bounces. 60% bounce. Because it absolutely flushed and cleared out the order book and was thinly traded. We dropped down to a low of 2018. We held weekly support from the last dump, and the bulls are trying for an equilibrium. And the Sol BTC chart, same deal, trying for the weekly higher low. Doge, again, biggest, most beat up name to the downside. I could care less what you think about the fundamentals of Doge, whether it's a scam or a joke. It has trading opportunity, 55% to the upside. Bulls must confirm the daily trend change. It broke to a lower low, as did XRP. They are in the weaker category. Weekly downtrend, lower high, lower low. And Bitcoin obviously did that as well. But there are altcoins that have not done that. Doge BTC, weekly lower high, lower low. So if you're watching a bunch of altcoins, put them in different groupings. Who held the low of mid-May and who broke it, because names that are holding it are obviously holding on stronger. That being said, there were bigger gains to be had on names that broke their support. That doesn't make a whole bunch of sense. It depends on the time frame of the trade and your aggressiveness as a trader. If you're just looking for an oversold bounce and holding it for 4 to 8 hours, playing the weakest names, as long as you're not too early, is the way to go for the biggest gains. But if you're looking to enter swing trade positions, then that's a different animal. I am very done talking. Hopefully this was insightful. Feel free to ask any questions. Check out traderpro.com. Do a good thing or two, and we'll see you soon. It's a woodpecker. Couple of whiny baby crows.